We get so caught up in the day-to-day of micro of running our businesses that sometimes we miss the fundamental changes that are reshaping markets in general. And, I'd love to hear your perspective on what the big shifts that you're focused on that are driving Apollo's business, just stepping back from the day-to-day.
So if I start in history a little bit, and I think about the drivers of our business, what powered us from 40 billion to 550 billion? And I really start at the global financial crisis. Global financial crisis, we had a change in rules. In the US, Dodd-Frank and associated rules, in Europe, elsewhere. But these fundamental changes to markets, we didn't notice because almost immediately after the legislation was passed, we printed $8 trillion. And everything went up and to the right. And everything went up, everything was liquid, interest rates went down. And so it obscured fundamental changes to markets. And the three that I talk to clients about, one is the inherent lack of liquidity in markets, which sounds crazy given how much liquidity there's been. But if you really think about what happened, Dodd-Frank, among other things, penalized market-making capital. We have roughly the same amount of market-making capital in the world today as we did in 2008. Markets are 3 times their size. Nothing is liquid on the way down. It's only liquid on the way up. So everything that was public got less liquid. Everything that was private actually got more liquid. I don't mean they're the same today, but the band of outcomes between public and private has narrowed. The second is to look at the role of banks. Dodd-Frank was specifically addressed to reduce the impact of global money center banks. US banks today are less than 20% of debt capital to US businesses and consumers. The new bank is the investment marketplace. In many instances, through firms like ours, who package and underwrite and grade and securitize. But make no mistake, the investment marketplace is the role of the banking system today. Huge driver for our business, particularly for us, the investment grade portion of the market. And the third, and I think the most powerful and the one that we're still grappling with, is indexation and correlation. So if I think about how Apollo views the world, we no longer believe there's alpha left in publicly traded fixed income markets, or broadly syndicated markets for that matter. The marginal buyer of everything is an open-ended mutual fund, an ETF, or a derivative trader. They have never met the management team. They've never read the document. They have no idea what they're investing in for the most part. And they are buying when they get cash and they're selling when they lose cash. How do you as a fundamental investor compete with that? You're always in a whipsaw. And then I flip over to equity markets. And I think about most of the money in the world is S&P 500, a huge percentage. A huge percentage of the market is ETFs or other forms of indexation. And 5 growth stocks are 25% of the S&P 500. So is there an equity market today that we grew up in thinking of fundamentals, or is everything indexed and correlated? I think the last 8 years would tell us everything is indexed and correlated. Last year in particular would tell us it's indexed and correlated, that everyone has the same trade on, which is leverage to the Fed. So if you're a fundamental investor and want alpha, I believe you need to step back from public markets. And that's our business, stepping back from public markets. It doesn't mean you're illiquid. It doesn't mean private equity. It just means an alternative to publicly traded stocks and bonds. And then if I put my hat on and look forward, technology is revolutionizing our business. I mean, I could take any aspect of our business. I could take global wealth. It would not exist without technology. Securitization would not exist without technology. And the change is picking up rather than decreasing.
I like the pitch for private investments. It's a good one. I want